Welcome back. $4 Dogecoin. Do you think it's going to happen? This is quite the move from where we are today, where Dogecoin is sitting at just around 22 cents. But there's a lot of other things also going on in the crypto markets. We're going to be talking about 500,000 Bitcoin. That is what MicroStrategy now owns. We're going to kind of review what's going on there. We're also going to be talking about the Bitcoin reserve getting voted down in several areas throughout the world, and that is also important. We're going to start right here. The Optimism Superchain, CeeLo, Chainlink, and Hyperlane launch a cross-chain tether on the Superchain. Now, as you guys know, we kind of took a little bit of a break from this channel, so we missed, at least on the channel, a lot of things that have occurred over the last 6 to 8 months in the crypto markets with integrations, partnerships, expansion, price moves. So in the coming months, we're going to kind of catch up on everything that's going on. But this super chain is one of the newer things. I'm going to be doing a separate video with a little bit more extensive information on what the super chain is. But before we get to this news, don't forget to give the video a thumbs up, hit that subscribe button, try to upload as much as possible. If you guys want to help support the channel, you can click the join button here on YouTube to learn how you can become a channel member, or you can use the super chat feature down below in the comments section. And so blockchain infrastructure protocols CeeLo, Chainlink, Hyperlane, and Velodrome have launched a cross-chain version of Tether's USDT on the OP superchain in a move designed to improve the interoperability and liquidity of the world's most widely used stablecoin. And as we've talked about before, right, interconnectivity, interoperability between chains, this is super critical, especially where we are now in the world of digital finance. And so the super chain is a network of optimism governed blockchains built on a common standard code base that shares security, governance, and values. Every OP chain in the super chain is built using the OP stack and governed by the Optimism Collective. And so if you want more information on what the super chain is, let me know down below. Check out my other video about this. But anyway, in the February 18th announcement, the new Super Tether stablecoin will be fully backed by equivalent Tether reserves locked on CeeLo, an Ethereum scaling solution. I have a video open from I think last year on CeeLo. And Super Tether achieves the cross-chain functionality through Chainlink's cross-chain interoperability protocol and Hyperlane, another interoperability framework. The cross-chain stablecoin is intended to provide essentially free access to Tether on the superchain, easing the burden of blockchains having to deploy bridged versions of the US dollar-pegged token. And this is critical because obviously keeping bridges between different chains, there's a cost involved, and there has to be, companies willing to kind of do this. And what we're seeing is the kind of, I guess you can call it democratization of this decentralized world where they're essentially creating protocols that are built on top of protocols that are built on top of protocols to kind of do all the back end transacting for these very large networks. Currently, Bridge Tether fragments the stablecoin's liquidity across the superchain, which is at odds with Optimism's vision for a unified, interoperable collective that benefits from shared liquidity. CeeLo's co-founder told Cointelegraph, saying, "These bridged assets are also not compatible with the forthcoming native superchain interop standards or upgradable to native Tether, limiting future adoption of the stablecoin itself," right? He said, while Super Tether is solving the current liquidity fragmentation issues, it's also designed to grow with the collective. Super Tether makes it possible to bring USDT anywhere on the Optimism chain, according to the chief business officer at Chainlink. He said Chainlink data feeds have been used over the past half decade to enable secure lending markets for Tether, including currently securing $3.7 billion in Tether deposits and $2.2 billion in borrows in Aave's version 3 core Ethereum development alone. Now, the reason I'm kind of bringing this up in this video is because we are going to be talking about Ethereum. And Ethereum, let's just talk about it now, okay? Before we talk about the Bitcoin reserve, before we talk about the Ethereum hack, let's talk about Ethereum and where Ethereum is, right? Same day I'm recording this video, Ethereum developers are kicking off the Pectra testing on Holsky, right? So we've been kind of briefly touching on this in previous videos that there's going to be a Pectra upgrade for Ethereum in and around April. That's kind of the target date that they've set so far. And this is very in line with my thesis that we are entering the next Ethereum narrative cycle, right? Ethereum has been down and out from a price perspective. We've seen a lot of attention on Solana and a lot of money getting put into Solana. But as we've talked about, I mean, Solana, literally all they've created, apparently, from what it seems, from what is going on, the only thing that they've created over the last 4 years, or the last 2 years in the bear market, I should say, is meme coins that are just pulling value from users and screwing everybody else while a few people get super rich. And so the big money is exiting Solana. And where do you think the big money is going to go? In my view, it's going to go into Ethereum and these Ethereum based solutions that, I mean, guys, they've created a super stable coin. I never even, that's actually probably a better title for this video. Let me actually note this super tether. I mean, guys, Chainlink interoperated into Ethereum, and then therefore everything that's interoperated on Ethereum, Polygon, CeeLo, Optimism, Avalanche, these are all now connected with the super chain by these kind of new connections and interoperability features. And Solana doesn't have that, right? Dogecoin doesn't have that. We're going to be talking about Doge in a minute. Bitcoin doesn't really have this. Cardano doesn't have this. Litecoin doesn't have this. This is very specific to Ethereum. This is, in my view, why Ethereum is really the super blockchain compared to these other ecosystems, because all the ecosystems connected to Ethereum are also as powerful, if not more powerful, than Ethereum because of the interoperability and programmability. And you can't get that in any other ecosystem out there. And so, yes, Ethereum, in my view, is well in line for this kind of narrative shift. And so Ethereum's Pectra upgrade launches on the testnet, introducing new validator rewards, account extraction, and layer 2 scaling improvements. And again, now they're testing it. Is it actually going to happen in April? We're going to stay on top of that. So make sure you guys are subscribed to the channel. That way you never miss any of the news. But anyway, it's going to be introducing features that augment Ethereum accounts, support layer 2 scaling, and improve user experience for validators. The Pectra fork will follow the network's DOGECOIN upgrade, which slashed transaction fees for layer 2 networks and improved the economics of Ethereum rollups. The DOGECOIN hard fork rolled out in 2024, basically 1 year ago, and was perceived as a big step for mass adoption. And according to the Ethereum Foundation, Pectra represents a major step forward for account abstraction. One of the major changes includes a proposal which enhances Ethereum account abstraction by allowing externally owned accounts to execute batch transactions and sponsored gas payments. Gas sponsorship allows users to transact from an account without Ether, and alternative authentication, spending controls, and other recovery mechanisms. In addition, this upgrade will increase Ethereum's blob capacity by 50%. The mainnet currently supports an average of 3 blobs per block, which will increase to 6 after the Pectra upgrade. That's a 100% upgrade. Hello. 3 blobs to 6 blobs is a 100%, not 50%. But anyway, blobs are data storage used by layer 2 blockchains to send compressed transaction data and proofs to the mainnet. Since blobs hit Ethereum, layer 2 transactions have become significantly cheaper. And so we'll see what kind of happens with this. But yeah, it's looking good for Ethereum. Does that mean throw the bank account to it? I don't necessarily think that would go for any individual asset, but I mean, some of these prices are coming down pretty hard. And I believe Solana is going to continue to drain. And as it continues to drain, remember, the value doesn't just disappear, it moves. And we're going to see it move. Just to where, that's a whole different story. I think it's going to be Ethereum and many of the layer 2s that we've been seeing kind of price suppression for quite a while now. And now we're going to be coming back to Ethereum in just a minute. But before we go on with the Ethereum news, SEC Enforcement Division closes their investigation into Robinhood. And so this is yet another kind of move in the direction that we believed that we were going to see the crypto markets move after the Trump administration. You know, he said he was going to be pro-crypto. He said he was going to get rid of Gary Gensler. He said he was going to put people in who are, you know, more pro-crypto. And I think that that's a good thing. And I think that what we're seeing from the SEC kind of redirecting and saying whether they think well, basically dismissing these cases because it's not just Robinhood. They also did this with OpenSea and sorry, I had another article about OpenSea, but I don't know where it is. Uh, but yeah, OpenSea they closed oh right here. SEC closes their investigation into OpenSea, and we also know Coinbase they dismissed the case or they're going to be dismissing the case. So it seems like the SEC is like, yeah, we need to redirect. We need to give we need to give clarity to these companies who are trying to operate in the United States. And I think that this can be very, very positive for crypto. But again, is this priced into the market already? I think it is. I really do. And remember what I've been saying about these Bitcoin reserves, specifically at the federal level. I don't think we're going to see a Bitcoin reserve at the federal level anytime necessarily soon, or at least to the point where we're going to see massive buying of Bitcoin. I think that that is going to take some time to roll out. And even Bitcoin maximalists have been saying that. And they say that it really needs to happen at the state level. And that's what we've been seeing around the country. We've been seeing state after state introducing Bitcoin reserve bills. But now we're hearing 3 US Bitcoin reserve bills fail despite Trump's pledge with a smack of speculation. So, 3 bills aimed to introduce state run Bitcoin reserves. Montana, North Dakota, and Wyoming, home of Senator Lummis, these were downvoted over the past month. That's very interesting that Wyoming downvoted a Bitcoin reserve because I believe Wyoming is a very pro blockchain and pro crypto state. We know their home senator, but again, Senator Lummis is at a federal level, and they're talking about state level bills. We also know that Wyoming, they just did their stablecoin implementation project, and they chose a few different blockchains for it. As we've been talking about, right, for stable coins, there needs to be the ability to freeze and seize, and there needs to be the ability for interoperability, right? Anyway, so yeah, this is very interesting that the states are voting these down so quickly, right? And this, again, I think it's just going to take a lot more time than people think till these bills get passed and we see these Bitcoin reserves get implemented, right? The bill's detractors warn that setting up a crypto reserve risks jeopardizing taxpayer money. They said this just smacks of speculation, one Montana representative warned when he voted against the bill. Over 30 states are exploring legislation involving Bitcoin reserves and digital asset investments. And so, yeah, I mean, they're voting it down in a pro crypto state as well, Wyoming. So again, at a federal level, I don't know that we're necessarily going to see it. We are hearing about they're going to talk about it, but I do think that there's going to have to be some type of legislation that gets passed, right? They may be able to say the Bitcoin that the U.S. is holding, we're not going to sell, but in terms of buying more Bitcoin, I think that they're going to have to pass some legislation, and that obviously is going to be not the easiest process. It's probably going to take a lot longer than most people think. I mean, most people thought we were already going to have a reserve within the first 10 days of the president going into office. A lot of people thought that the US would have it by now, just in general. But that's not where we're at. Anyway, moving on and back to Ethereum. The whole Bybit situation, I did a whole video the other day. It was called Fear of Ethereum. They want to end Ethereum or something like that. And I do believe that. I think these other blockchains, specifically the likes of Solana, right, that the maximalists in this ecosystem are seeing their valuations. I'm sure they kept pumping money in over the last few months. And Solana has kind of been range bound in the above $200 range for quite a while now, right? If we look at the 1 year, it went above $200 in November and kind of stayed up there through basically just the last week or so, mid February. So that's November, December, January, February. So basically 90 to 120 days, it's been above the $200 range. And it's been above the $100 range essentially pretty much for almost the whole past year, it looks like. And so, I think that there's been a lot of buying. And now probably anybody who's bought in the last year, which I'm sure there's a ton of people who bought in the last year, we're approaching their buy-in price, right? So they didn't take profits. They did not sell anything, even though we had one major dip and then a big run back up. To me, this looks double top-ish, right? Again, I'm not a chartist. I don't necessarily believe in charting. I look at charts and I look at charting and chartists, people who kind of study the charts and say, oh, this Bollinger Band and this band. I use this as more of like a reference, right? Because most of the market it's kind of based on sentiment, where the development is, where the narrative is, where the money's flowing, and all of this bear bull markets. And so we really have to kind of understand where we're at, right? Again, the big money, they bought in much, much lower, 25 cents, 15 cents, 30 cents. And, they're trying to say that Ethereum was hacked. Ethereum was not hacked. Ethereum was stolen in a hard wallet exploit or whatever you want to call it. But after the hack, which was $1.4 billion, Bybit saw over $4 billion in a bank run. Basically, a bank run is like, if you think that your bank is about to go bankrupt or fail, people start going to the bank and to pull their money out. And we know banks don't hold even 10%, right? When you deposit $100 to the bank already loaned it out. They don't have it. They don't have money. They have a small amount of actual cash. But this is a very, 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 very small percent, maybe 1 or 2% of what their overall customers hold. So if a very small percent of customers went into a bank, maybe not JP Morgan Chase, but maybe like a community bank, if like 15% of customers went in or 20% of customers and asked for their money, the bank would not have it, right? And so if you have that happening in multiple banks, this could cause a complete chaos because then the bank doesn't have the money and then people put it on social media and then more people freak out and then more people go to the bank to try to take their money out, then they can't get it out, then they start freaking out, then they get other people to go to the bank and it just becomes a crazy situation. But with these crypto exchanges, typically if there's like a situation that occurs where people are worried about the solvency of the company, they'll start going and withdrawing the crypto. And while most of these exchanges say they have the crypto available, right? This is the test, right? Proof of keys. Can you actually withdraw your crypto from the exchange? And so Bybit had no issues with any withdrawals. They said they were not going to have any issues. They said their customers are covered. Everything is safe besides the Ethereum that was stolen. But besides that, they were going to be able to cover it. They just needed a bridge loan. Now, this is where the risk gets involved. And this also kind of ties in with the whole Ethereum narrative, that the Ethereum narrative is shifting towards potentially going much, much higher, especially as we approach the Petra upgrade. And so what we saw was the bank run. Then we saw basically them not having any issues with withdrawals. And by the way, this is not the first time we've seen this. Right after FTX collapsed, this was the same thing. People were going into exchanges, withdrawing their crypto. We were seeing huge withdrawals from the exchanges. And once everything kind of settles down, people will start putting their money back into the exchanges slowly. But this just shows that the exchanges, it's hard to, unless the exchanges show their wallet address, it's very hard to verify that they actually have the crypto they say they have. But what you can see here is clearly Bybit was doing things the right way, it appears, because otherwise a $4 billion plus the $1.5 billion hack, they probably, if they weren't holding one-to-one crypto, they probably would have collapsed, and that's not what we saw. So congrats and good job to Bybit that they were able to cover customer funds. I mean, obviously there's some serious issues with whatever happened and how they got exploited, but that's neither here nor there. Bybit closes Ethereum deficit with a $1.2 billion post-hack purchase. And so remember, if you had, let's say, 1 Ethereum or 100 Ethereum on the Bybit exchange, and all that got stolen, what Bybit has to do is if you want to withdraw your Ethereum, they have to buy the Ethereum on the market. Now, from what it seems, is they got loans from other exchanges, right? They're called like bridge loans. It's basically a loan for a period of time, a very short period of time, until you could pay it back. And so with a bridge loan, the difference between a bridge loan and them just closing their deficit and buying $1.4 billion of Ethereum is if they just go on the open market and buy $1.4 billion of Ethereum, what's going to happen to the price? The price is going to go up, and then they're going to end up paying higher prices to buy back the Ethereum than they would need to, right? Because they would look at this and say, okay, we're going to buy it back at $2,650. But if they start buying, right, $1.5 billion worth, the price is probably going to go up, and then they're going to end up paying more, and then the price is going to go up, and then they're going to pay more, and the price goes up, right? That doesn't make any sense. So what a bridge loan is, another exchange would loan them, let's say, 50,000 Ethereum, or whatever the situation is, right? Let's just say not $1.5 billion, but let's maybe say $100 million. They loan them in Ethereum to cover any withdrawals. So anybody who does want to withdraw their Ethereum, they're withdrawing from the bridge loan. But what they're doing is they're going to end up slowly buying the Ethereum back, and then they're going to pay back their loan with the Ethereum, if this makes any sense. Or they're just buying the Ethereum from a private buyer off market. And if they do it off market, it's not going to necessarily affect the price. And that's what it appears that they did. But them buying $1.5 billion in Ethereum, this is, I believe, going to also put buy pressure on the market. Now, buy pressure on the market can also, once the buying stops, that could drop the price, right? Because the algorithmic trading bots, they're like, wait, somebody's buying $1.5 billion in Ethereum. We have to keep pushing the price up a little bit. And then once those purchases stop, all the algorithms, they still think that the price is going up because there's buying, but that's not what happens. The price actually goes right down. We see this a lot after MicroStrategy announces their purchases of Bitcoin, which brings us to the next part of this video. MicroStrategy at the end of February 2025, they bought 20,356 Bitcoin for almost $2 billion, and now they hold approximately 500,000 Bitcoin. And so what happened? They bought $2 billion in Bitcoin at $97,000. I'm recording this video just a few hours after they made this announcement, and the price went down by $2,000, right? And so if you look at the charting, the hour by hour charting on their previous purchases, this typically happens where they'll say, oh, we just bought $2 billion in Bitcoin, and then the price drops. And you're like, wait, why did the price just drop? In my view, and again, this is just my analysis, I could be wrong. I don't know this 100%. This is my opinion. But I think it's the algorithmic bots that see these purchases, right? Even if it's like half a Bitcoin at a time, right? And then they get to 20,000 Bitcoin. The algorithms see, wait, we see more buying than we saw last week or yesterday or 2 days ago or in the last 90 days. Where is all this buying coming from? Maybe it's a bullish thing, maybe it's a bank, maybe it's MicroStrategy, doesn't matter. But then the algorithms kind of adjust, even small adjustments, $100, $200, $300, $1,000. And then once the buying stops, the algorithms still have to adjust. They have to identify that the buying stopped. And then when they see that the buying stopped and they see that there's not that much volume or that there was a big tip off in volume, like think about that, $2 billion from one entity. So all the trading that normally goes on, however much it is, it doesn't matter, whatever the number is. Now you have $2 billion in a very short period of time coming onto the market. You could probably, if you have analytics, you could probably identify that in the market trading. But either way, the price goes down after because all that the algorithms identify, wait, there's no more buying. That $2 billion liquidity, it's done. And then so the price drops a little bit because there's no more buying pressure, or the buying pressure subsided from what that $2 billion in a very short period of time. Hopefully that makes sense. But yeah, now MicroStrategy has 500,000 Bitcoin. And like I said, I don't think that they're going to stop buying. I think they're going to keep buying. And you can see on the price chart, they keep buying at the top of the market. This is very, very risky in my view, especially because in my view, we're also halfway through the bull run. And so we're basically closer to the bear market than we are to being in the bull market, right? In the next bull market, I should say. And so this is very risky, right? And you can even see here, according to Michael Saylor's announcement, he said they bought 20,000 Bitcoin for $2 billion and 97,500 each. As of today, they hold 499,096 Bitcoin, acquired for $33 billion at $66,357 per Bitcoin. Just last week, when I did a video about MicroStrategy, this number was 65,000. So now their dollar cost average is up almost $1,000. And every time they purchase at the top, this dollar cost average goes higher. Now, granted, over the course of time, I believe that MicroStrategy is going to be fine. But if we hit a bear market and Bitcoin goes down to 40,000 and then 30,000, is that going to cause some kind of liquidation scenario where the board or the shareholders of MicroStrategy say, you guys got to sell some of this Bitcoin to offset some of this risk? Maybe, maybe not. I don't know. We're going to find out if Bitcoin does go to 40,000. Hopefully it doesn't. Hopefully it just keeps going higher. That's kind of the idea. But there's the potential, and we have to kind of understand that as market participants understand both sides. What is the positive and what is potential negatives of all of this buying? But I think they're going to keep buying. I mean, Michael Saylor is making it very clear he is not slowing down. And for that, I mean, he has he has balls of steel, right? I mean, he is not stopping. And I think it's going to pay off in the long term. I do. But I just think that there's going to be a lot of people who are buying into this stock that are not prepared for the downside risk, even if it's temporary, even if it's just for a month, right? Michael Saylor and MicroStrategy, they'll be fine. But MicroStrategy, the stock price in your portfolio, may take a hit, right? And it's also important to remember that Michael Saylor owns zero MicroStrategy shares. So, I mean, that's something to keep in mind as well. His risk is in Bitcoin. His risk is not in MicroStrategy stock from a valuation perspective. But look, we've also come down substantially. And I told you guys, I believe this was going to happen because essentially the stock dilution, right? They're going to keep buying Bitcoin, but they're buying this Bitcoin with money that they raised from selling more shares on the market. Selling more shares on the market dilutes the value of every other share, especially in a non-upward moving market. In an upward moving market, yes, the price movement to the upside could outpace what they're selling on the market, and it could keep going up. But I do think that we're going to probably see more downside risk in the short term. And again, MicroStrategy's strategy is long term. So they may say, maybe not publicly, but they may say, like in their strategy sessions, listen, the stock price is going to have to take a hit over the next 3 years while we sell all of these shares on the market and keep acquiring more and more Bitcoin. And in the next cycle, Bitcoin hits $300,000, $400,000, $500,000, 2028, then it's going to be a completely different story for MicroStrategy. So maybe that's something that they're looking at. I mean, we're already down just in 1 month from January to February, 30% in the stock price. And people were buying up here at 400, right? People were buying at $350, $400, $450. And I understand why. It went up to $542. So I understand why people were buying like that. But, I don't think that they were thinking about the risk. There's this group on X called Irresponsibly Long MSTR. And I understand being long MSTR, especially in the long term. But if you can play the market a little bit, I would do that. I mean, I would do that. $450, and they're increasing the share size by 30x. Yeah, I would sell. And I'm probably not, I still hold MicroStrategy. But what I would say is I'm probably not going to buy anymore until we're sub $100. A lot of people don't think that's going to happen. Maybe it won't. But I think that there's the potential that it will. Anyway, moving right along, and don't forget to give the video a thumbs up. Analyst predicts Dogecoin price surge to $4. Is it possible? Well, a crypto trader put forward a fresh bullish outlook at the end of February on the price of Dogecoin over the next few months. According to him, the largest meme coin has been trading in a chart pattern since 2014, with its price set to rally with new record high of $4. The rationale behind the bullish prediction is the formation of an ascending channel pattern on the Dogecoin price chart on the monthly time frame. An ascending channel is a pattern used in technical analysis characterized by two primary trend lines: the upper line connecting the slow progressive swings high and the lower line connecting the swings low. Investors can trade as the price oscillates between the pattern as demand cushions and supply barriers, or enter a position following a breakdown or breakout of the pattern. In the current scenario, the Dogecoin price appears to still be trading within the ascending channel after finding support and rebounding around the 19-cent level. So you can see here an ascending triangle right here, or the chart. Remember what I said. I'm not a chartist. I use the charts and the chartists' opinions. It's kind of like a piece of what my portfolio analysis is. Here's the deal. I mean, Dogecoin right now, if we look at the price, is about 22 cents. The maximum supply is 148 billion Doge. So if we look at the math on this, right, let's just say 150 billion Doge. And a $4 price would be $600 billion. Is this possible? Well, let's look at what's $600 billion right now. Only Bitcoin. Ethereum would have to double. Dogecoin currently would have to basically 20x from here to get to $4. Maybe a little bit less than 20x, but around 20x. Listen, this is possible, especially with the fact that we have a Doge department in the government, the fact that Elon is head of it, the fact that Elon said that he wants Dogecoin to have usage, the fact that we've already heard about the government potentially putting transparent reporting of spending and stuff like that on the blockchain. There is it is more likely to happen in the next couple of years than I think ever in history before, and probably ever will be in the future, right? If it's going to happen, if they're going to use Dogecoin for, some actual, real needed financial transparency and auditing, it's going to be in the next like 12 to 24 months. Otherwise, it probably will never happen. And that's my opinion on it. But if it does, 20x is, I think that's on the low end. $4 is probably on the low end, right? Because I think at that point, market cap won't matter, because Dogecoin, if they can save $1 trillion, let me be clear. When I say they, I mean Doge, the department. Now, I know there's no actual connections to Dogecoin, but if Doge is able to save $1 trillion or $2 trillion of value, and they implement some type of blockchain transacting utilizing Doge, yeah, the market cap will be in the trillions. No doubt in my mind about that. Because, I mean, we're basically almost at $1 trillion. I mean, no, we're not almost at $1 trillion. To get to $1 trillion, we would have to 30x, 40x, 30, 33x, something like that. So a 20x, I mean, we're almost there, right? It definitely could happen. Just the speculation alone could drive the price up, even if there's no actual value add besides utilizing Dogecoin blockchain to back the transparent reports that they would put out on spending or whatever the situation is. I don't know. It's all just very interesting to think about, and also very interesting to kind of understand how things could potentially work out in the way that the chartists say, right? I mean, 20x without any kind of narrative like that, like what we just talked about with the Doge department implementing Dogecoin blockchain. I don't know. But again, also Elon invited the Dogecoin founder to go work on the Doge team. That's also another indication that there's potentially going to be some Dogecoin implementations from a blockchain perspective. So anyway, a lot to think about, and really just a lot to kind of analyze and kind of break apart and decide, where should I invest? Should I invest short term, long term? What are the pros and cons of both? And obviously, make sure you guys do your research, understand the risks involved, and good luck in your investing journey. Let me know what you guys think down below in the comments. Check out my other videos, and until I see you, crypto on.